Jeff, there's a lot to choose from right now. What's on the top of your mind?
I've got a few things on my mind. One is this retail trading phenomenon that we're seeing is primarily a U.S. phenomenon. We're just not seeing it in Europe. It's one of the reasons why we're recommending more international exposure, not seeing the same kind of speculative frenzy in the markets. But I would note that silver obviously is a global market, and that did help boost some companies tied to the metal in Europe today. But the other thing interesting, I think, is China's PMI came out this morning. The data show that input and output prices have surged to the highest level in 8 years. We're used to China being a source of deflation for the markets. It may turn around, start to become a source of inflation for the world. And it looks like there are a lot of assets maybe not priced for a surge in inflation. So we'll have to see how that shakes out.
Jeff, when you look at the big picture right now, I mean, nothing's more important than vaccines at the end of the day, right? And it looks like the number is picking up pretty quickly. We're averaging over 1 million per day here in the U.S., and our COVID curves are starting to turn south, which also looks good. What does it look like in terms of the sustainability of this, and thinking about the vaccine more from kind of an economic perspective and when it might start to show up in some of these numbers?
Yeah, well, hopefully, we start to see some economic effect soon. But right now, with the folks that are getting vaccinated around the world are not the ones that are very quick to engage the service sector of the economy, right? Folks in nursing homes are not going to go out and book a cruise. So it's going to be a while till we actually see that begin to filter through. The biggest concern is these new variants and what we see going on there. But here you can see in this chart, we have seen a pretty good upward inflection in the number of vaccinations as a percent of the population in the UK and the US. That's tracking well. Europe, hopefully we start to get to that inflection point, which is usually around the first 30 days. But there are some concerns now. We've got these vaccine war developments where different countries are kind of imposing some nationalism around maybe ingredients and the vaccines themselves. So that is a concern. We've got to keep a close eye on that. Absolutely critical to seeing the recovery take root, and that is a big worry.
So right now, when we look at how the numbers are adding up, generally we want to see all these curves moving pretty quickly higher, U.S. and the UK out in front right now. And the trailing data generally, Jeff, is going to take a while to show this, right? For the most part, our economic data is trailing. We're looking backwards. But what about some of the more soft numbers, the surveys and such? Do you think we might start seeing this in elevated optimism levels? Where are we going to know that, okay, vaccine is starting to show up in a very real way?
Yeah, that's a great point, Oliver. We do get a lot of good sentiment surveys and indicators from business leaders and consumers and even investors in the U.S. They're a little less frequent in Europe and Asia, but we'll be looking to that. That's going to be key. Confidence is a big part of this. We all know consumer spending makes up such a huge portion of the economy. So if consumers are feeling more optimistic that, hey, this is only a few months longer and then things will be getting more back to normal, that should help them sustain spending in the near term. But we've got to keep a close eye on those indicators. And I think that, we have seen them slump a little bit here lately, and even business leaders have been a little bit more cautious. And that's interesting because earnings estimates have been heading higher, even as business leaders have been cautious about when they might begin to see the turnaround in terms of their sales. Okay,
now the high frequency numbers have still slowed. We look here across the world, pretty much all of these are moving in the same direction over the last 3 months, lower. We've been in the lockdown mode. Obviously that hasn't helped. Jeff, can we use previous instances of the waves from the virus? We've had tight lockdown periods that then opened up, namely this summer after the first wave, things tried to open up. We saw a little bit of strength in that data from May to June and July. It was around that time we had some pretty big moves in some of the cyclical assets, and then they fizzled out before they woke up again in the fall. Do you think that as we see these curves going down, can we project out and say, hey, we're going to get something similar? We're going to get this type of kind of relief in terms of activity, and what do we look for to see if that's actually happening?
I think that's the hope, right? We saw a V-shaped recovery before, but then it stopped. It didn't get to be a V plus. We only kind of got back to where we were maybe at the beginning of 2020 or the end of 2019. And by the way, the end of 2019 wasn't great. We had 6 of the G7 economies at 0 or negative GDP numbers. I'm talking about Japan, the UK, Canada, France, Germany, Italy. They all had 0 or negative GDP in the fourth quarter of 2019 before COVID even hit thanks to the manufacturing slowdown. So getting just back to those levels isn't enough. We need to see more. So we'll need to look to see those high frequency indicators go beyond what we saw the rebound in the summer of last year. And so watching things like air pollution is a key thing I keep a close eye on. We can track that hourly in major cities around the world and get a sense of manufacturing activity. We don't like air pollution, but we know it goes hand in hand with manufacturing activity. Of course, indications like subway ridership, commuter traffic on the roads. We can take a look at retail store sales. A lot of these high frequency indicators should begin to show us that we're beginning to see a turnaround. I would expect that we'd start to see that in the UK first. They were the first to start vaccinations, followed by the US, and then followed closely by Europe. And all of that will hopefully look something like what we saw in China, where they've continued to see very strong growth, a V-plus shaped recovery to be sure.
Jeff, one area that you're looking at is Israel. Tell me why. I think this is a pretty interesting way to view the complications around the vaccine. Why focus in, and what's happening there?
I'm sorry, I missed that.
Oh, Israel. You've got a chart that shows the Israel numbers and the idea that there's some kind of complications in the vaccine rollout where maybe there's a small delay in showing up in the numbers, given that there are some different strains. Walk me through why you're looking at this.
Yeah, so great. Thanks for bringing this up. So this is interesting because Israel certainly led the recovery, and with more than 30% of its population vaccinated, it's really done very well. But we've got now this emergence of more infectious variants starting to overwhelm Israel's hospitals. So even though they're sort of the poster child for getting this this vaccination right, they're having some trouble here, and they're going into nearly they're still affected by lockdowns. You've got a real surge in the number of patients on respirators in the emergency rooms. So it may take another week or two before we really start to see the country see critical cases begin to decline and allow the country and the economy begin to return to normal. So the market isn't right now drawing much optimism from Israel's success so far on the vaccine front, but that could change in the coming weeks. We've still got to keep a close eye on Israel as sort of the leading country in terms of the world in fighting using the vaccine. Okay,
so a place to watch is kind of a benchmark here for whether or not we really start to see some of the more resilient variants respond to this vaccine. Jeff, as we see the strength in some of these names, Novavax last week and the other reports that we got from J&J, kind of introducing yet another potential vaccine has helped this whole entire view of the economic recovery. But in the meantime, we've got real numbers from companies. We've got earnings coming out, and I want to close the conversation as we had the opening bell there. How are these numbers looking, and are the hopes improving, and are analysts responding to some of these reports?
Yeah, this is really interesting. So even as the economic momentum seems to be slowing, as you just pointed out in the high frequency indicators, analysts are raising companies' earnings expectations for this year and the next, and they continue to outpace downward revisions. And that's sort of interesting. And I think maybe there are a couple different reasons for this. One is that maybe we call it the politician's put, in that even as perhaps the vaccination pace slows down a little bit, or there's risks to it, maybe that makes stimulus more likely. And politicians putting more stimulus in place, well, all of that fiscal stimulus ends up on the income statement of a company at some point. So that can help to support earnings in the near term. So if the vaccine works out, companies win. If it doesn't, the stimulus comes into play. Companies win in terms of their EPS. So a little bit of that politician's put may be showing up here in that better momentum in upward revisions to earnings relative to the slowing momentum we're seeing in the economic data.